Hello everyone, welcome to e-content sessions. This is the 39th session of BCom 6th semester cost accounting paper of Vijayanagara Sri Krishna Devaraya University, and this session is about process costing, and from 39 to 48 session, that is 10 sessions, will be about process costing. In this session we will discuss about the meaning, definitions, features, advantages, limitations, and certain terms, that is normal loss, abnormal gain. And in the next session we will discuss about the formulae regarding the process costing. So what is process costing? Process costing is a method of costing which is used to ascertain the cost of production at each process, operation, or stage of manufacture. It is a method of costing adopted to find out the cost of those goods which are manufactured in each stage. Each stage is called as a process. The output of each process becomes the input for the next process, and so on. The product becomes a finished product only after it passes through all the processes. The raw material introduced in the first process loses its identity and the output is transferred to the next process. Process costing is used where the production moves from one process to another process and its final completion is done, and there is a continuous mass production of identical units through a series of processing operations. It is applied for various industries like chemicals and drugs, oil refining, food processing, paints and varnish, plastics, soaps, textiles and paper, etc. So let us know about some definitions. CIMA defines process costing as the costing method applicable where goods and services result from a sequence of continuous or repetitive operations or processes. Costs are averaged over the units produced during the period. And according to Kohler, process costing is a method of costing whereby costs are charged to processes or operations and averaged over units produced. From these two definitions, we can frame out the features of process costing. In the case of process costing, production allows a series of sequential processes. Since the product manufactured passes through various processes, production is continuous activity. Units produced are uniform and therefore product differentiation is not possible. Following are the main features of process costing. First one is process costing is used by industries where the goods are produced through the sequence of several processes. Process costing is a method applicable where the output results from continuous or repetitive operations or processes. Process costing is suitable for industries like paint, oil refining, rubber, chemicals, sugar, paper, soap making, textiles, etc. This method is also employed where it is not possible to ascertain the prime cost of specific order. Second is products are identical and cannot be segregated. Under process costing, units of production are uniform and homogeneous. As a result, unit cost of a process is obtained by averaging the total cost of each process. Third is process costing enables the ascertainment of cost of the product. It is achieved through every stage or manufacture. Costs are ascertained for each process at the end of cost period. Fourth is cost follow the production process, that is cost incurred in one process are transferred to the next process along with the output. The input will pass through two or more processes before it takes the shape of the output. The output of each process becomes the input for the next process until the final product is obtained, with the last process giving the final product. Fifth is the entire production activity is characterized by a number of stages of production, that is processes. Production is carried on in different stages, which are also called as processes, having a continuous flow. Each process includes a number of operations. The boundaries of the process are determined by similarity of work performed, supervision, and physical location of men and machines in the plant. Sixth is production is in continuous flow. Production is in continuous flow, and the output of process 1 becomes the input of process 2, and so on until the finished product is obtained. The output of a process is transferred to the next process, generally at cost of the process. It may also be transferred at market price to enable checking efficiency of operations in comparison to the market conditions. The output of a process except the last may also be sellable, in which case the process may generate some profit. Seventh is normal and abnormal losses may arise in the processes. The total cost of the process is adjusted with normal losses, abnormal gains, and scrap of the process. Normal and abnormal losses may arise in the process. So what are the advantages of process costing? It is simple and less expensive to find out the process cost. Due to the simplicity of the cost records, process costing involves less efforts and expenses are accounting. Okay, second is production activity in process costing is standardized. Hence, managerial control and supervision becomes easier. It is possible to have managerial control by evaluating the performance of each process. Third is it is possible to determine process cost periodically at short intervals. Average unit cost can be computed weekly or even daily. It is convenient and easy to compute the cost of different processes as well as finished product at short intervals, say daily, weekly or monthly. Fourth is more accurate costing. In case of process costing, it is possible to allocate expenses to different processes on rational basis. This results into more accurate costing. Fifth advantage is it is easy to allocate the expenses to processes in order to have an accurate cost. In process costing, products and processes are standardized, hence it is easy to apply standard costing. Last one is it is easy to quote the prices with the standardization of process. Standard costing can be established easily in process type of manufacture. In process costing, the products are homogeneous. As a result, cost per unit can be easily computed by averaging the total cost, and price quotations become easier. So then what are the limitations of process costing? The first limitation can be it is difficult to value the work in progress. Value of work in progress is computed on the basis of estimates, which results in further inaccuracies. Second one is once an error committed in one process, it is carried over to the subsequent processes. Third is process costs are only average costs. These are not accurate. Since process cost is the average cost, it may not be accurate for analysis, evaluation and control of the performance of the various departments. Fourth one is process costs are only historical. These are not of much use of effective control. The cost obtained at the end of the accounting period is historical in nature and is of little use for the effective managerial control. Fifth is process costing does not evaluate the efficiency of individual workers or supervisors. Sixth is it is not easy to value losses, waste, scraps, etc. Seventh is it is difficult to apportion total cost among joint products and byproducts. Last is when more than one product is produced, calculation of cost per unit becomes difficult. Now let us know some of the important terms in process costing: normal losses, and abnormal gains. In many process industries, some loss or wastage is inevitable. Such a loss may be the result of evaporation, shrinkage, chemical change, change in moisture content or spoilage. The process loss may be normal or abnormal. Then what is normal loss? Normal loss or normal wastage is that loss which is inevitable and unavoidable. This is the loss which is unavoidable because of the nature of the raw material for the production technique and is inherent in the normal course of production. Such loss can be estimated in advance on the basis of past experience. These losses arise due to shrinkage, evaporation, chemical reactions, spoilage, cuttings, etc. The normal loss is recorded only in terms of quantity, and the cost per unit of usable production is increased accordingly. Where the scrap possesses some value as a waste product or as of raw material for the earlier process, the value thereof is credited to the process account. This reduces the cost of normal output, and process loss is shared by the usable units. Normal loss is further classified into two categories. Number 1, normal loss without scrap and normal loss with scrap. So then what are abnormal losses? Abnormal loss, it is the loss over and above the normal expected loss. Any loss caused by unexpected or abnormal conditions such as plant breakdown, substandard materials, carelessness, accident, or loss in excess of the margin anticipated for normal process loss is regarded as abnormal losses. Abnormal loss is not expected to arise when operations are carried on efficiently according to norms relating to the manufacturing operations. Cost of normal loss is shared by good units of production in the process, but the same cannot be given to the abnormal loss. Units representing abnormal loss is valued like good units produced, and the value of units representing abnormal loss is debited to the separate account which is known as abnormal loss account. So abnormal loss is calculated with the help of the following formula. If the abnormal loss is to be calculated in the quantity, abnormal loss quantity equal to normal production minus actual production. So if it is to be calculated in rupee value of abnormal loss equal to quantity of abnormal loss into normal cost per unit, and it can also be calculated by another formula, that is normal cost of the normal output into units of abnormal loss divided by normal output. If the abnormal loss has got any scrap value, it should be credited to the abnormal loss account, and the balance is ultimately written off to the costing profit and loss account. So then what are abnormal gains? If the quantum of loss is less than the determined percentage of normal loss, the difference is called the abnormal gain or effectiveness. The presence of abnormal effectives should not affect the cost of the good units in the normal circumstances. The value of the abnormal effective is debited to the concerned process account. This value is calculated at the rate at which the effective output would have been valued if normal wastage had taken place according to the expectation. So abnormal effective or abnormal gain can be calculated as under. So if we have to calculate the abnormal gain in quantity, actual production minus normal production, and if it is calculated in rupee value, that is value of abnormal gain equal to quantity of abnormal gain into normal cost per unit, and another formula is normal cost of normal output into units of abnormal gain divided by normal output. So let us now know what is the costing procedure under process costing. For the purpose of costing, The factory is divided into various departments, each department representing a particular process. A supervisor is appointed for each department or to supervise the functioning of his department. Each process is a cost center and thus costs are accumulated for each process. A separate account is maintained for each process to which costs of material, labor, direct expenses and overheads are recorded. Following are the main elements of cost of process costing. First one is material. Materials required for each process are drawn from the stores by way of material requisitions. No distinction is made between direct and indirect materials. The value of materials issued is debited to the process account. When the output of first process becomes the raw material of the next process, the account of the receiving the process is debited with the cost of transfer in addition to the cost of additional materials, if any, added to the process. Second one is labor. Wages of workers engaged wholly in a particular process are debited to the process. If the workers are engaged in a number of processes, the wages are apportioned to different processes on the basis of time spent. Generally, the direct labor cost is a very small part of the cost of production in case of process costing. Third one is direct expenses. Direct expenses are the expenses which can be easily identified with the process. Depreciation, insurance, electricity, repairs and maintenance, etc. are some of the examples of direct expenses which may be directly attributed to a process and thus are debited to the process concerned. So fourth one is production overhead. Production overhead is a major constituent of the cost of production in case of process costing. Production overheads are the expenses which are common to more than one process, that is, which cannot be directly allocated to any process. Production overheads include rent, telephone, lighting, gas, water charges, etc. Generally, production overheads are recovered at predetermined rates based on direct wages or prime cost. Thus, process cost does not include office and administrative overheads and selling and distribution overheads. So, in this session, we have learnt about the meaning of process costing and definitions and features and advantages of process costing, limitations and some important terms, that is normal loss, abnormal gains and the costing procedure under the process costing. Thank you.